We think they're in the beginning of a long-term downtrend. The beginning of that long-term downtrend, I think, started at the start of 2017, so we're about a year and a half.
Against which currencies?
Against most currencies that you want to choose.
Is it intentional? Is it for the trade imbalance that they're doing?
No, I mean, a little bit of it is the risk that you talk about and the widening deficits, but a lot of it has to do with the natural ebb and flow of the economic cycles. You point out very rightly that the US is well ahead in terms of growth, and they're doing extremely well. Eventually, these foreign economies, I think, are going to catch up, and some of this fiscal stimulus will eventually fade. So that gap's going to close, and these foreign currencies are going to strengthen over time. So
it's not dollar weakness; it's foreign currencies strengthening as they join the party.
Yeah, so I think that's a reasonable way of putting it. And you know,
how does the dollar get weak when the Fed's in a tightening cycle?
Well, much of that tightening is already expected, of course. I mean, we're seeing it's priced into the interest rate futures. It's priced into the 2-year bond yield curve, for example.
284 is priced in.
I mean,
that's high.
Those dots that the Fed policymakers are always around about the 3% level. So maybe it's not 100% priced in, but it's reasonably, fully priced in. And where are we going to see the activity? Where are we going to see the action? We think we're going to see it in places like Canada, where we've already seen it, but the UK, the Eurozone.
Should we be happy? Should we try to do anything about it? About a declining dollar? Yeah. Should we be happy? Is it good for trade, or is it bad for assets coming here?
As long as it goes down in a slow, orderly manner and it's not chaotic and it doesn't, say, scare foreign investors off, I don't think there's a problem. So, from my opinion, I'm indifferent to currencies go up and currencies go down, and so I'm not worried about it.
It has to do with the rest of the world doing better. Does it have anything to do with if rates go up and we're trying to domestically fund our bond retirements and new issues? There's going to be a lot of supply, isn't there? Investors are going to demand higher rates eventually.
There is that,
and that will weaken the dollar.
And there is some concern that just as the Federal Reserve has decided that it's not buying as many bonds, or in fact is starting to allow some of the bonds to roll off its balance sheet, the Treasury, the government, is starting to want to issue more. So there's a little bit of a change in the supply-demand balance.